Hi, good evening, everyone. This is Warren Thomas again with our friend Major Harris. Tonight we're dealing with again cryptocurrencies and things that you should know. The market's been going through some interesting times, and I wanted Major to discuss some of these situations going on. And Major, are you on?
Yes, can you hear me?
I can hear you clearly. Major, the floor is yours. Thank you for coming out again in our series. And what's going on with cryptos?
Well, a lot's been going on, and since we spoke last, I think week we spoke, and cryptos were at a pretty much a high. It was at a all-time high, and Ethereum was at its high, and and then Monday came. And between Monday and earlier today, markets, what you're hearing in most media is you're hearing a word called crash. You're hearing, Bitcoin has crashed, Ethereum has crashed, the whole crypto world has crashed. And I'm here to really say, none of that is true. Um, when and to really kind of explain what's happening and what you're witnessing is a level of correction in market terminology. Means, since one of the titles of this was definitions, that you are looking when in a market structure where various non-fundamental reasons, meaning speculative reasons such as profit taking, non-fundamental reasons, meaning that there's nothing per se wrong with Bitcoin's code. Bitcoin wasn't hacked, hacked. Nothing fundamental with the structure of any of these assets really had a negative occurrence. What did happen is because of all of the euphoria surrounding Bitcoin, Ethereum, and all, influx of traffic to these networks. And when we talk about the networks, we're not understand there's a difference between Bitcoin network and a exchange that Bitcoin you know trades on. So when you understand that there is just like the New York Stock Exchange, to use an analogy, Apple trades on the New York Stock Exchange. Company, Apple, if something goes wrong with, let's use an even better example. You remember when Facebook, I don't know how many of you are watching this that are really into stocks, but when Facebook had its initial public offering, its IPO, the NASDAQ, which is the exchange that handled that IPO for Facebook, had technical problems. The exchange causing it to just be a disaster for Facebook, for people trying to engage and trade and make money with Facebook. That wasn't anything fundamentally wrong with Facebook. It was a technical problem with the exchange. simultaneously, this is what took place with Bitcoin and a lot of the crypto coins that you see. That's why almost every single crypto coin went down. The reason for that was because the exchanges that coins trade on, not the coin itself, because you could, if you didn't have your coins on those exchanges, transact with those coins on their own network. So I hope I'm not losing. Warren, are you following what I'm saying?
I'm following exactly what you're saying. I thought you gave a good example in regards to what happened with Facebook. And if the platform that the coin is trading on is having problems, then whatever coins are there on that particular platform will have challenges. And you're right.
Exactly. That is a issue of the exchanges. So there are many exchanges like Poloniex, Coinbase being one. Literally, I had a few coins on Coinbase and I was trying to do a transaction. Couldn't do it. Literally, you're frozen out. So when this happens, panicking. Hey, what's going on? Hey, something is wrong. It's Chicken Little. The sky is falling. When you don't know what's going on and you're not really getting the information because you're now dealing with exchanges. Now, this is a point that I'm going to make in maybe another future video with the problem of centralized exchanges. Because when you have that everything in one place, all of your coins are on this exchange. If something happens to that exchange, you now have a problem with all of your coins. That's why personally, I don't believe that you should keep your coins. You can buy your coins on exchanges, but then immediately, I recommend to everyone to immediately off of those exchanges. Now, I mentioned I had a few coins on Coinbase. In the midst of, I didn't know they were going to have a problem. I was doing an exchange. So I'm just using Coinbase for a purpose. So it's as if I said to you, all of your money in the bank. But now, so you have your money under your mattress, but you now need to pay a bill. So you went to the bank, deposited enough money to pay your bill, mortgage, whatever. When you put that money into the bank now, boom, the bank has a problem. Systems are down after you've already put your money into the bank. Are you following me, Warren?
I got you. Absolutely. Go ahead. Continue.
So that is what happened to me, literally. But now that's with just those few coins that I actually put into Coinbase at that particular time that got held up. Nothing, I mean, it's not a thing, and understand, it's not that I lost money or lost my coins. It's just that you, for a period of time, you are not able to access its similar analogy I just gave. You have your money in the bank. You go to Chase, and if Chase tells you, oh, our computers are down, can you get your money? Can you withdraw? Can you deposit? You can't do anything.
Correct.
Because the computers are down.
And that's happened to me on a couple of occasions with big names like Wells Fargo.
Chase, Wells Fargo, they all have it because unfortunately we are, and this is one of the problems that the crypto economy is trying to solve centralization, meaning all of your eggs are in one basket. So if something happens to that basket, you now have a problem with all of your eggs.
Mm.
The crypto system, the main thing, Bitcoin, First Real, is about decentralization. So when you hear the word decentralization, going back to our definition theme, what does that mean? It means that centralization means that everything is held in one or company. So, for example, Google, Facebook, these are centralized systems. Apple, servers, all of their computers are held in that network. Decentralization means that the network is spread out millions of different little computers all over the world. What does that do? Well, how big companies try to do that, they say, okay, Google, Facebook, they'll have a server farm, another server farm. So they'll try to spread out, but still, all of those servers are connected to the same network. Whereas with decentralization, these computers are running the same program, but they're not on the same network. So if something happens to computer number 5,000 that's in Russia, it doesn't impact the overall network.
Mm-hmm. Mm-hmm.
Does that make sense?
Absolutely. Absolutely.
As when in a centralized system happens to one computer, even though they have what's called redundancy, so that, okay, another computer, but because it's on the same network, if there's a network issue, like what you saw recently with bugs, if there's a bug, that bug could travel throughout the entire network. Centralization, that's very difficult, because if a bug is on one computer running the program, you don't really have the ability to infect the entire network. Does that make sense?
Makes sense. Makes sense. So let me ask a question. So what we're looking for then, and I'm going to get back to what you initially started off with centralization versus decentralization, because that's a very important point. What we're looking for then is on a peer-to-peer level, meaning that individuals have power in how the flow of the currencies transpire, versus a central body dictating everything. In essence, what you're saying. Am I correct?
That's correct. And of course, to the more technical, this is not a technical conversation, because I think that's one of the big things, is that you have to speak to the everyday person. And what I'm trying to do is to put these things that are a little bit more complicated than how I'm describing it, but the average person a better understanding of what's happening. The average person isn't really engaging with cryptocurrencies, Bitcoin, because they don't even understand what are getting up there and talking about terabytes, quantibytes, and and speaking in this foreign language. And it's like, what are you talking about?
Mm-hmm. Mm-hmm.
Decentralization. So it is the goal here to try to put it, you know, a more layman's term so that the average person can get a better understanding will then hopefully be able to see the value in the cryptocurrencies and just the crypto universe in general. Now, to your point of centralization, exactly. That's why you have, for example, the central bank. The Federal Reserve is a central bank. That means everything in your monetary system comes from one particular body. Everybody was on edge to find out recently, what is the Fed going to do? What is Janet Yellen going to do? Because, these people make the decision that impacts everybody's life.
Exactly.
That's, whereas and I'm going to get into a little bit of difference between Bitcoin and a lot of the other currencies, a lot of the other companies that are out there.
Before you go into there, Major, and just hold on to that thought really quickly. One thing I want to really give people an example of, and going back to the initial point, when Bitcoin first came out, if you look at the charts, initially in the first 3 to 4 years, Bitcoin went through some very traumatic gyrations in value, right? But if you're looking at the charts from 7 years ago to today, you'll still see that consistent growth over time. So understanding in relationship to corrections versus a crash, this may be an opportunity to buy versus
right,
and so forth. So I just want to put that on the table, and you can go into explaining what your thoughts were. Go ahead.
Well, I think that's a very important fundamental understanding that we should buy low, sell high. The game is to buy low, sell high. What happens, for example, right now, I'm talking to people interested in Bitcoin and cryptocurrencies when they hear it's at its high. That's when everybody wants to get into the game. It's not how it's supposed to work, people. So then this correction happens on 20%. People are saying, I'm glad I didn't get involved. No. To say, now I want to get involved. You want these opportunities. You want these corrections. Another term you'll hear is buy the dips.
Mm-hmm.
That means if something, then is it a fundamental shift? Did something change? Did Bitcoin get hacked? Is something fundamental in the code or in the company or with the team? For example, a fundamental issue. Let me give you an example of a fundamental issue. For Ethereum, lead developer, founder is a gentleman by the name of Vitalik Buterin. Now, if tomorrow comes out that Vitalik Buterin is no longer with Ethereum, that is a fundamental issue because he's part of the management team. He's Ethereum. So that's something that is a fundamental issue to say, wait a second. Either an investor in Ethereum or interested in Ethereum changed with the fundamentals. The code has been broken. That, because remember, this is all cryptography. So if your cryptographic, well, cryptography, what is cryptography? But once again, back to the theme of definitions. Cryptography is put it in a simpler term, code breaking. Okay, you're writing codes, so I'm trying to communicate to you, putting things together in a way that only the person with the key, it's a lock and a key. So I'm locking up information in a way that only the person with the key can unlock that information. You know, if you think back to famous eras of World War II, Enigma projects, or people might have seen a movie where, you know, somebody is writing something and, you know, they have a cipher and someone else has to have the key. You know, I could write something in a way that if somebody just looks at it, like, what is this? This means absolutely nothing. This is a bunch of gibberish. But to the person with the key, they can make sense of what was written. Does that help to understand cryptography? Now, that would be a fundamental. If someone broke the code to where now all of the encrypted, all of those locks, that's locked up, can now be easily unlocked. Fundamental issue. That means time to sell. Because fundamentals have changed. Now, there are fundamental investors like myself that look at what's really happening. What does this thing really do? Team. These are the fundamental questions, others, that we ask. What problem does this thing solve? Technical investors that don't care about the fundamentals as much at price movement, charts, patterns, to then say, oh, you know, at this Fibonacci, you know, then they start using all these, you know,
kind of esoteric terms.
Yeah. You know, it's a double header. It's got a double head and a head and shoulder. You know, and here to disrespect or discredit anyone that's a technical trader. Hey, they make a lot of money.
And to add to that, technical trading in some ways identifies the psychology of the market. So
Right.
the use of technical charts and those particular terms that you mentioned, like head and shoulder patterns and all the other things that go along there. So it does have a use, but continue.
Correct. So understand, like I said, I'm not a big technical person. I'm more of a fundamental person, but it's whatever works for you. technical, because like Warren just said, technical trading is to say, you know, what we really care about is making money. And how do we make money? We make money by understanding the behavior and patterns of other investors. So if I know their behavior, that Monday mornings, people are lethargic, and so my technical charts will show me that Mondays is a people are not, there's low volume, so I could easily move the market on a Monday morning because of just the psychology of market. So the better I understand, so it's technical trading is like playing poker. Poker is not a game of cards, it's a game of people. You're really, when you're a technical trader, you're really playing the people, not really the fundamentals of the underlying asset. You don't really care about, because what you care about is the person going to do. What is that? What are the other people that buying and selling this asset? What are they going to do? And if I can predict what they're going to do and move accordingly to how I know they're, if I can buy before they buy, sell before they sell, then that's how I can make money. And there are people that understand this and do very well at it. Now, I kind of got sidetracked from the issue, what we were talking about in regards to what really happened. You know, so we said it's a correction due to exchange technical issues that caused some things to drop as much as 20, even some of the smaller altcoins dropped as low as 30%. But if you look right now, most have recovered. So, as I said, buy low, sell high. Time not to, if you, especially if you had cash, this was the time to buy. You want to buy when there is a fundamental issue. So if something was $100 and it dropped down to $70, and you look at it and you can say, this thing was worth $100 2 days ago, now it's $70. What has fundamentally changed about why did people sell? Well, they sold because they were panicking about the exchanges. Okay, so now that the exchanges are back up and running and fine, what are they going to do? Those same coins. You know, so this is kind of going back to the psychology. You know? So, you know, that's all they're going to do is buy back, because the only reason they sold is not that they wanted to sell because they didn't like Bitcoin anymore, they didn't like Ethereum anymore. They didn't know what was going on with the exchange that their Bitcoin was on or their Ethereum was on. So now that they see that things are back to normal on those exchanges, so the price is going right back up to the $100. So this is where, you know, you pretty much, I did some things at 30% off. You know, think about it like that. Think about it like, you know, you get your Jordans. You know, hey, it's still Jordans. Are people not going to wear Jordans anymore? No. Or BMW, Mercedes Benz. Oh, something happened with dealership, and people started selling their Mercedes Benz at 30%, 30% off. Is there something wrong with the car? No. Didn't know what was going on with the dealership, so now they're selling these cars at 20 to 30% off. Once the dealership reopens, it's going to go back to the same price and more.
And let me add something to that, Major, and just hold on to your point. And I want to let the audience know there's an old adage: when there's blood in the streets, you buy. When the market is happy and euphoric, that's when you sell. That's an adage to add to what you had said earlier. Also, back to fundamentals. One of the reasons that caught my interest about the cryptocurrencies, Bitcoin, was the fact that of the control that the individual had over his or her medium of exchange, and the value that can be placed in that medium of exchange. So in that, I can exchange with you or anyone else for a product or service globally that allows me the latitude not to be taxed unnecessarily by external interests, and have the freedom of mobility to transact business anywhere in the world. Fundamentally, that has not changed with Bitcoin, and I would think with some of the other currencies also. So, like you said, if the fundamentals have not changed, then you're looking at, well, what are the technical issues that drove what happened today? And that's what, as an audience, we want you guys to kind of learn to compartmentalize, observing the changes fundamentally in relationship to what's happening with Bitcoin and these other coins. They're not going anywhere. The horse is out of the barn. And not only will there be additional coins, but there will be continuous growth, because more and more people are understanding that how this system works in relationship to currency and money. And a lot of people are dissatisfied with it and so forth. Hence the reason for the issues that some of the fiat currencies are also having. Because you guys got to remember, the fiat currencies are still experiencing declines, and economies globally are still troubled. I was recently looking at some articles in regards to the closure of retail stores across the country. And they anticipate that there will be more retail stores closed this year in the first half of the year, which is almost up, than all of last year. So there's something wrong in the economy, not only within the United States fundamentally, but globally. So no matter what the FOMC, the Federal Reserve says, and all these other guys saying, we saw what happened in Spain recently with one of the banks, Banco Popular, being sold for $1 overnight almost. There's something fundamentally wrong. And what tends to happen when there's challenges in the economy in relationship to currency, folks are going to look for safe havens, whether it's gold or silver, some kind of metal. But now you have the option in relationship to the, as I call them, the cryptos, Bitcoin, Ethereum, and so forth. And Bitcoin still stands, to me, at the top of the hill. Major, can you talk about, if you want to continue on your train of thought from before, but don't forget you were going to mention the differences between Bitcoin and some of the other currencies and so forth.
Right. When you wade into this arena of cryptocurrencies, I wanted to touch on something you said. Bitcoin stands as king of the hill, and there is a issue or a debate, conjecture that's happening about Ethereum and Ethereum becoming the new king of the hill. And this is I own Ethereum. I've owned Ethereum since 2016, and I trade Ethereum. But understand, I see Ethereum as a tool, not a currency, because that's what the Ethereum project was designed to be. Bitcoin was designed to be digital cash. When you read the white papers, that's what it was designed to be: a store of value, a currency. Ethereum is not designed to be a currency. And people are making the big mistake of thinking that Ethereum is a currency. Now, yes, I'm sure those out, pardon me, there will be a bunch of Ethereum, people that are like, oh, of course it's a currency. Okay, let me put it like this. Airline points can be a currency, but that's not what it was designed to be, right?
Exactly.
You that I've got a 10 million Delta Sky Miles, and people will buy it from me. Okay, is Delta Sky Miles a currency? No, it's not what it was designed to be. Are people willing to pay me, and I could sell my Sky Miles for more than I bought them 10 years ago? Of course, because there's, as long as they go up to the amount of the price of a ticket, I can. So these things are tools that people are attributing a currency component to, which I find it to be very dangerous. And I think a lot of people are going to find themselves in a lot of problems if they think of Ethereum as a store of value. Let me explain why. Ethereum is a project designed in, pre-sale it's not even 3 years old. August will make, I think, its 3-year anniversary. And really and truly, that was a pre-sale in 2014, and it really didn't even catch its legs until what really kicked off the Ethereum project was in 2016 when it launched a project called a DAO, Decentralized Autonomous Organization. This was pretty much their first ICO, in a sense, because it ran on top of Ethereum. Okay, let me go into the Ethereum thing. Bitcoin is it. Bitcoin is the currency, and that's it. All it's used for is sending value from one place to another place. That's it. Simple. Ethereum is a more complex, convoluted, smart contracts. Ether, those tokens that people trade and that you engage in at public face. Okay, let me give you an example. Ethereum is like Android, in the mobile platform. Okay, anybody can use Android. So what Ethereum does, it says we're Android, we're a platform. So Samsung could come along and say, okay, we're going to build on top of Android, but now we're going to do our own thing. We're doing our own thing over here called Samsung. These are Samsung tokens, but they're built on Android. So simultaneously, there's a token called Golem. It's built on Ethereum, but it's its own token now, and that's what is really fueling what's called this ICO, initial coin offering craze. Bitcoin doesn't really have a lot of that happening because even though to do things on the Bitcoin blockchain, the main thing that really operates on the Bitcoin blockchain is Bitcoin.
Major? Major.
It's to another place. Hear me?
Okay, now I can hear you. You're back. Continue.
Right. So that's all the Bitcoin blockchain really does. Ethereum blockchain is a much more convoluted and complex tool because it's a tool. That's what it's designed for. It's designed for smart contracts. It's not designed to be a store of value. So people are buying these tokens thinking that other people are going to buy the tokens and that it's just going to go up in value because of companies using these tokens. First things first, of all these ICOs, nobody's really using these platforms. Ethereum reminds me of the internet bubble, the internet, 1996 to 2000. Remember, there are a lot of companies that try to do a lot of things that we're doing today. Facebook is nothing new. There are companies that, Friendster and a bunch of companies tried to do things that Facebook do today. Were lost leaders. Basically, they were just before their time. The environment, it's not that these are bad ideas, but the society isn't really ready for smart contracts yet. So even though a lot of these smart contract ideas are and things, but actual usage, put it like this, the average person isn't even using Bitcoin as money. And that's a very simple, fundamental thing, right? So if the average person haven't even caught on to how to use Bitcoin as money, you now get people to use smart contracts. That's another 5 years before the learning curve. I mean, it's been 8 years for people to even use Bitcoin, actually use it. I'm not talking about trading it, I'm talking about using it. Smart contracts can be used as a store of value because even though you don't use your money, you still have your money stored, right? So put your money underneath your bed. You're using it as a store of value. So I don't care whether I spend it or not because I'm on my bed to store value. That's what Bitcoin is. So even though people are not using it to buy airline tickets, buy groceries, things of that nature, as of yet, a great store of value. Like Ethereum. Ethereum is all about smart contracts. Are people, not ICOs, not these companies, and that's when I say Bitcoin is not a company. There's no real person in charge of, there's no real management team for Bitcoin. Bitcoin is just a truly decentralized application. Ethereum is more of a company. Dash is more of a company. other cryptos, as Warren, what's it? Companies. They have a leader, they have a executive team, they have, they're a centralized organization. Not to say that's, but it's not Bitcoin. Bitcoin is a truly decentralized, there's no leader. Satoshi Nakamoto, who the heck is this guy? And a secret, I'm Satoshi Nakamoto. I mean, anybody could be Satoshi Nakamoto. That's if anybody is. What's the beauty in it?
9:20.
Are you there?
Yeah, I'm here. That was my
Yeah.
technology on my side going off inadvertently.
Okay, no problem. But that's the beauty in Bitcoin. There's no real interference. Now understand, why is that different than Ethereum? Has a leader, so history of Ethereum, what took place. That DAO back in 2016 that raised all this money, over $100 million, was hacked due to a flaw in the code. So it's not even that somebody did something. No, they wrote their mistake. It was not a brute force attack. It wasn't anything like that. It was, hey, wait a second. It's like, let's say you in your safe. My money is in the safe. But guess what? You forgot to lock the safe. Right? You didn't do something right. So the person just opened the door and took your money. The DAO. See, remember now, the DAO is that first ICO. The problem with Ethereum is, look at their history. It's not that Ethereum was hacked. Ethereum is here. The DAO was on top of Ethereum. The problem was with the DAO writing poor code. That crashed the whole system. Ethereum got crashed. Now you've got 70, 80 DAOs built on top of Ethereum. You understand? One of these things to crash, and then the whole thing is going to go down again. Write poor code. Anything could happen with any of these ICOs on top of Ethereum. See 20 tokens. And just like when something happened with the DAO, crashed the whole system. Now that with each new ICO ERC20 token, that amplifies the risk with Ethereum. So I'm not here to say don't buy Ethereum, because until that happens, with the hype and with all the things, I'm still trading it. And but I do it with that mind, knowing that I need to stay nimble. So as soon as I see any of these things happen, if I hear about a hack or hear about anything, get out of Ethereum. You could say that about almost any other or crypto, but Ethereum mainly because of other cryptos, like Bitcoin is just Bitcoin. Dash is just Dash. The risk is just isolated to something going wrong with Bitcoin. Dash, something going wrong with Dash. Ripple, something going wrong with Ripple. Right? Something can go wrong with any of these other blocks that's built on, it's like a house of cards. So the more cards are built, as soon as one, it could send the whole house tumbling down. In finance, we call that counterparty risk, meaning it doesn't have to happen to me. It's again terminology. You know, nothing happened to me. Something happened to a buddy of mine that impacts me. You know, hey, a pretty bad example is you didn't, to those guys around the corner, back we're from Brooklyn, so years ago, you didn't say anything to the guys around the corner, and now because of that, because your buddy went around the corner running off his mouth and started a problem, now you go around the corner and these guys are beating you up. Why? Because you're like, I didn't do anything, but your buddy did. Ethereum is your buddy that, because of what Golem does, or any of these other ERC tokens, ERC20 tokens, because of something happening with one of these tokens, can really create a risk to the whole Ethereum project. Just like when something happened with the DAO, it still is a token on Ethereum, go wrong. And there's other things such as Ethereum is thinking about splitting or changing from a proof of work. Proof of work, back to definitions, means mining. When you hear about mining, that's proof of work. Hear about proof of stake is ownership. Do I have a stake in this? That's more like equity. So now, how people vote, the people who could vote are the people who mine. That's in a proof of work. Are you doing work in this project? That's proof of work. If you're mining or doing some kind of work in the project, stay in the project. Proof of stake says, I don't care about who's mining or doing that, because you can mine and not hold any of the coins. So I don't care about what you say, because you don't own any of the coins. Even though you mine them and you immediately sell them. People who actually own and hold coins, those are the people I want to listen to. That's proof of stake. Thinking about moving from proof of work to proof of stake. Well, remember now, when the DAO got hacked, now you're gonna live, and a lot of words, huh?
Wait, this is what it's about. We want people to understand.
A lot of, like, what the heck is all these damn words? Hard fork. What is a hard fork? Well, a hard fork is when a project is running. There is a token. A hard fork says we're going to change something fundamental about how we operate. Something fundamental is going to change about how we operate our project. And we want that's involved in the operations to change with us, meaning miners mainly. So if you run a node, it's like the software. If you run a node, or if you're a miner, you need to upgrade to this new, for example, let's use the analogy of the mobile systems. So, you know, it's, I don't even know what it's on now. What is it? Nougat. Marshmallow to nougat, you know, from jelly bean to, okay, that would be a software because, right, a new operating system comes out, fork, you can upgrade or you cannot upgrade. You can still use iOS even if you're not using the latest software. With a hard fork, they say you have to use the latest software, or you have to use whatever change we're making in our operations. You have to do it, or you're going to get kicked out, or you no longer can operate on this network. That's a hard fork. It means a hard line has been put down to say, this is what you have to do. But you're out of here. That's a hard fork. Soft fork is, we're going to make these upgrades. We're going to make these changes. If you want to do it, you could do it. If you don't want to do it, fine. You can still, you know, be on the network. You could still be involved in operations. You'll just not be using the latest software or whatever kind of operation we've now put in place. With Ethereum, they chose to do a hard fork because they got hacked. Not because of anything fundamental with Ethereum. Remember, the DAO got hacked, not Ethereum. But Ethereum, because they put Vitalik Buterin, I might be butchering Buterin's name, but you know, that guy said, hey, I just lost a bunch of money because I invested in this DAO. And me and my buddies, we invested in the DAO, so they did some real Federal Reserve, Wall Street crap, and they bailed themselves out. So we came up with an idea. We're just going to create a new. We're going to hard fork so we can save ourselves. So instead of losing those tokens that we invested in the DAO, create new tokens for us. So we don't lose any money. Because we made a bad investment in a project that wasn't properly vetted. So we're just going to go back to our old world. So all this new world stuff, nothing when you still have the same old world mentality of, hey, it's about me and me making all the money I can do. That's it. Think about, because similar thing happens, you know, Mt. Gox, you know, was not or anything like that, but you know, a lot of people lost money with Mt. Gox. If it was a centralized system, like, you know, people could have said, hey, we're going to do something to save ourselves. But because it wasn't, people just had to lose their money and wait until the price went back up. And that's it. With Ethereum, they didn't want to do that. Some old world stuff. And these are the same people that are running the company today. So these are other reasons why I'm very cautious about, I seriously question the integrity of the management, because they're about saving themselves. They're just like every other Wall Street CEO. And hey,
Major.
Yeah.
What I want the audience to really understand what you just said, and they have to understand. That's why we titled this partially definitions and terms, because we want you guys to understand. Do not go into this blindly. Don't fall for a lot of the hype that you'll hear in the news, but also expect that there will be challenges in the marketplace, but you got to know what's going on. And like what Major emphasized earlier, we want to do it in a way that the average person understands what's going on. You're going to hear certain technical terms, but we're going to deal with real life terms that anyone can understand. Your grandmother, the teacher down the road, anybody who sees these opportunities and wants to participate would have a clear understanding. But you're also, with Major's experience, getting that background information so that way you understand what's going on behind the scenes. Major, I want to wrap it up, and we're going to continue this again in an upcoming segment where we deal with additionally with the terms. But folks, uh, uh, like we talked about, is this a correction? Was this a correction over the last few days, or was it a crash? We're looking at it as a correction, an opportunity to buy, and the same way you were taught about buying mutual funds or stock. Yes, you can diversify. The way Major had indicated, you may have Bitcoin, you may have Ripple, you may have Ethereum. Understand the differences between the tokens and the coins. Understand what is currency versus what is not, so that way you make a decision that's based on information, not hype and speculation. We're in this for the long term, because what we try to do is project out over the next few years, next 5, 10, 15, 20 years. What does the landscape look like economically? And we want to be positioned as traders to take advantage of that on a long-term basis. So that's why listening to these calls and presentations by Major Harris becomes important. Major, can you share your contact information with the audience so that anyone who has an interest in learning more can reach out to you directly?
Yes, you can always drop me a line at majorharris@gmail.com, and we'd be happy to, assist you with your crypto purchasing needs and any kind of or any kind of assistance we can just be to the overall market, to really just, because we definitely believe in the space, and definitely see it as a way for really excel in a very tough economic environment.
Absolutely. For those of you folks who like the information that was shared, please like the video, share it with others, and please subscribe to the Warren Thomas channel. You'll get a lot of interesting information. You'll get a depth of knowledge from individuals like Major Harris that will share his knowledge and experience in this particular marketplace with you. We're also, due to requests, we will be setting up a membership site for those who would like to participate more actively in understanding the cryptos and how to trade them and so forth. There will be a membership site set up. Keep in touch with us. It will be announced at a future date. And also, we will develop in the development of a starter kit for those of you who are interested in learning how to trade. Outside of talking to Major directly, we will have a starter kit for entering the crypto world, buying and selling of uh, uh, cryptocurrencies and so forth. Again, if you need to reach out to Major Harris, that's majorharris@gmail.com. Very simple. And again, my name is Warren Thomas. Thank you for participating and listening this evening. And we will see you on the road to prosperity. You guys have a good night.
Cheers.